In terms of growth strategy, in fact, as you know, we're going through a very unique times in Brazil in terms of economic activity, et cetera, et cetera. However, in terms of the agriculture sector here, it's growing fast. In the last 10 years, in fact, it has been growing by 10 million tons a year. So we do have a lot of products to work with. However, for this year, the current year, given the scenario, we're a bit more conservative there. So we're not projecting any growth, but the maintenance in terms of physical volumes of the commodities that we trade, soybeans and corn. So our plan is to stay flat. Of course, it depends on the development of the domestic financial markets. Even in terms of funding, of providing the source of funding that we have access to. So, but basically, the plan this year is to, put the brakes on the new investments in terms of capex, this kind of stuff, and try to maintain the volumes that we have been trading since last year. Well, the decline of the commodities has been a fact since 2014. In fact, and in 2015, we had the big hit, and then second half of last year, it's been a little bit. The curve is still down, but our projection is to stabilize, or even get back a bit again, up again in the commodity prices. But of course, it has the main influence of that movement was in the FX volatility in Brazil. We have more commodities to export, more products to export, but at lower prices. So we generate less hard currency dollars. So that's why our FX, our local currency has devalued against the US dollar. And of course, this volatility, that's what may impact us, because our margins, if you don't protect it appropriately with hedging tools, it may be jeopardized by the FX volatility here. Mostly because we're basically a natural exporter. We export 95% of our sales. Our natural funding is in US dollars. Either what we call here ACC, which is basically local trade finance, but it's funded by dollars, or export prepayments funded by banks overseas, or booking units overseas. So basically, it's dollars. It's trading. It's trade finance. In dollar terms here for us. That's our natural funding. Of course, Brazil has been downgraded, so the amount of credit facilities that the international banks are availing to Brazil, not Brazil in terms of all the banks in Brazil, has decreased a bit. And in addition to that, because of the crisis here, the domestic crisis here, the banks have been more selective, right? So there is a flight to quality here. Fortunately, in our case here, that we have been preparing ourselves since 2012, because that's based on the advisors that we have, and based our own reading of the market, we start preparing ourselves, putting more long-term loans into our balance sheets, and managing properly our liquidity. We raised, I should say, very dramatically our cash positions in order to be better prepared for a moment like this. Of course, in our worst dreams or nightmares, we wouldn't project anything like what is happening right now. But we prepared ourselves, so we're still on the safe side there. We hope that it's enough or sufficient for us. Yes, as I told you, I mean, in terms of the funding sources, most of it is in dollar terms. So we had the heat. However, as in our hedging, we do have a hedging policy in place, and the policy is summarized by just one word: we're always squared. So in terms of exposure, if we were losing if there is a larger cost in terms because of the depreciation of the local currency in our liability side, we have those tools, hedging tools that will protect our asset side as well. So we're even. So net, we don't have any hit. However, there are a lot of other aspects that you need to look for being a corporation in Brazil, in the Brazilian environment, such as the taxes, because depending on the instrument there is some taxation, and depending if you use another instrument, you offset this effect, the tax effect from our balance sheets. So, but net for us, at least up until now, we're okay. I mean, there is no. It has not affected our margins. Well, I think, as I said, the deterioration of the market here in Brazil and the appetite from the international market to Brazil, because of the downgrade and because of the economic problems that we're facing here, we can expect. I mean, we try to be prepared for a dry in the short-term facilities. That's something that may happen here in Brazil. There was already, I mean, as I mentioned, a flight to quality. So some of the companies that are weaker in terms of ratings, the balance sheet structure, they have already been affected badly. It's not our case yet, but there is a limit for everything, right? You're prepared for to cross the Sahara Desert, right? You pump up, you pile with water and food, etc., etc. But sometimes, if your transportation there, I mean, your SUV breaks down in the middle of the desert, so there's nothing to do. But that's something that we're exposed to. But frankly speaking, I think we have prepared ourselves for more than 3 years to face those difficulties. So in that extent, I think the possibility of having the financial market drying down here in Brazil is something that concerns us. And of course, in the long term, I mean, there is no liquidity available right now. It's even Petrobras, right, is not accessing those long-term fundings from international markets.